Yeah, nice. Sounds good. I'll let the resident know.
All right, thank you everybody for coming. I appreciate you showing up tonight. It's a pretty good turnout for a summer afternoon when we still have a little bit of light. So I appreciate you coming. Let's dive right into the presentation. First, we're going to start with a little bit of an outline here. We're going to start with James Pound has a presentation for us about taxes and information about that. And so we're going to try to get everything done within an hour to an hour and a half. Get any questions you have. So, Jim, if you're ready to go,
Okay.
we're ready for you.
I thought you were going to go over something.
Sorry, I'm going to launch right in. You can use which one? To the right is forward.
Well, good evening. I'm Jim Pound. I am a member of the organization. I live up in Davis County, so I generally go to the Ogden one, but my office is out of Syracuse. I have an office in St. George also. I do accounting, and got a lot of glare.
It's all shining right on you.
There you go. Oh, okay. And so, anyways, welcome. This is a nice big crowd. First of all, we're going to start off tonight. Last thing you want to do in the summertime is start planning for taxes. It's only been 6 weeks, right? It's only been 6 weeks. How many of you still have extensions on your tax returns for 2013? Okay, those of you do, what's the reason why you do? Okay, you're waiting for your tax man. That makes me look bad. Okay, what else?
Waiting on K1.
Okay, good. But there's a lot of you out there will often realize that maybe if they file later, earlier in the season, they reduce the chances of being audited. Having home office will automatically flag you for an audit. You can make a certain amount of money without them auditing you. Once you receive your refund, you won't be audited. Do you think any of those are true? No. Well, guess what? You're right. All these are all misconceptions. They have no influences as to whether you're audited or not. I have a tax client who's going to call me on October 15th to send in her corporate returns, all 8 of them, because she heard from her friend that works at the IRS, which is all from the IRS, said that if you do that, you won't get audited. So I told her, I says, it doesn't matter to you, just pay up, and I'll flip the button and away you go. But the biggest thing that they audit you for is right here, income. If you forget to send in any type of income voucher, that's what sets those little mailing audits. How many of you have been audited with a mailer? Boy, you're lucky. Do you ever get notice saying you underreported that they have a variance? Yeah, most of you have. Those are all audits. Whoops. Hang on here. Taylor's going to fix this. I hit the wrong button.
Nope, it's the computer.
Okay. Tips for starting planning for next year. We need to start. Yeah, go ahead.
You increase your risk of audit by mailing it in or using an e-file.
Neither.
Neither.
Because they're all going to, you're going to have a bigger chance of audit if they mail it in, because who's going to key that in? A human being, correct?
Oh, so more risk of an error.
More risk of a typographical error, where everything that I submit has to be so right. I have to have no commas, no and signs. I have to have everything perfect. I can't have any spaces out of whack, or the software won't let me submit it. The social security numbers have to be correct in all the holdings, because it'll come back and kick. Once it's been accepted by the IRS, I know that things are right there. If I have a bad W-2 federal ID number on it, or things like that, it'll kick. It's not foolproof, but there's a lot of prevention. It's a lot of safeguard of you doing electronically. The IRS likes it because it cuts down on them having to hire people, which they have cut way back. And if you have to deal with any type of inquiries or anything, even for us practitioners, sometimes they'll just say, call back, we don't have enough people. So dealing with the IRS is tough. They will tell you right out flat, they don't have anybody. Like I had four an income audit. And they says, we have nobody, you're just gonna have to do it on your own. So anyways, that's our government at work. For those of you who have W-2s, make sure you have enough withheld. Do not under withhold. I see people have to pay $600,000, $700,000, $800,000 because they under withhold because they don't want to give the government money. Well, if you end up paying $15,000, $20,000, like some of you may or may not do at the end of the year, they're going to penalize you for it. So if you're an employee, you have a payroll service, do your business, have enough withheld. You know, don't play games with the government because they look at that. Store your things in a safe place, and I can tell you, I had a lady who lost her 12 and 13 tax returns, and I give them all back to her. I mail them physically to them, and she's lost them, and she's a single woman. She says, I don't know where they are, and I need it for a loan. So store the things where you know where they are. I don't care where you do it. You know, get a storage unit if you have to. Organize your records. What do you mean by organization? What's organization? One is different to me or to you. Does that mean shoebox organization, big box under the bed, in one closet? You have to put things in one place only. Establish one location where everything in your household can be put tax related. Don't put it in drawers, because at the end of the year, you're going to maybe forget that you pulled money out of this account, which is taxable at the end of the year. You didn't get a statement from them because you moved, and then you get an IRS letter within 18 months later. You know, just avoid that aha moment, because a lot of people panic when they get stuff from the IRS, and you shouldn't, because half the time they're errors. 2/3 of the time there are errors. If your preparer is a good preparer, he will catch a lot of them before they even get to that point. Shop for a tax professional. I'm not out here selling myself, but I do have services available. The reason why I do that is, we're going to find out later, the reason why. You are ultimately responsible for your taxes. You might forget something. Generally, that's not going to be my fault. However, if I see a tendency, the same thing year after year, and I didn't catch it, that becomes my fault, my liability. But I'm not liable for tax, but I'm liable for any late fees. That's the way I work it. That's the way a tax professional works. Some of your CPAs won't agree with me, but I do. If I forget something, and if I didn't pull out the tax return from the prior year and look at it, and I missed it and say, you didn't give me this, that's my fault. It's my responsibility at least to ask, to compare last year's to this year, because they're going to be very similar. However, if we had a new entity come into the being, we forgot it, that isn't really something that I will do. But generally, we look at last year's return and can do a comparison shop, because they generally don't change that much. We're going to skip itemization of deductions. A lot of people, how many know what itemization versus standard is? A lot of you all do, so we're not going to cover that. What are the advantages of it?
More deductions.
That's correct. But more deductions mean you paid out more. So I tell people, don't get so excited that you had $18,000 in interest on your house. You already paid it out. That's dollars out your pocket, you know. So don't get so thrilled about having high itemized deductions. Sometimes it's better to go standard and have reasonable other business income or losses on your businesses. But keep up with changes. That's where I come in, help you keep up. You know, as you know, the Congress is stumbling along, nothing's getting passed. There are hidden provisions within the Affordable Care Act that are going to be implanted this year. They're going to be enforced. We don't know. There are some things that should be enforced now that haven't been enforced for the 2013 filing season. And so we're just kind of floating along using the old standard of tax return preparation until they say we have to use it. A lot of that comes to depreciation and business expenses. And we'll get into business expenses, et cetera, in a minute. Here's your table of, you know, if you're single, you have to have at least $6,100 worth of expenses before you can itemize it. If you marry or join, it's for this last year was 12.2. See, that's still a lot of money to get over the hurdle. Lots of times people bring in all their charitable, their mortgage and their property tax, and it comes up to $6,000 in your marriage because you don't have enough. Just take the standard. I says, that's a great benefit. Okay, rental expenses. That's what we're going to get into. Rental expenses. Many of my clients, most of them have rentals or deal with the real estate or industry of some kind. But since we're in the business of dealing with rentals, I put up there, the IRS tells us no personal use of the dwelling. We can't really stay in the rented out for ourselves for more than 14 days a year. You know, if you have a resort home, like we have a single condo down at Sports Village in St. George, and we used to live in it. And then we turned it over to be rented out by people that come into Tuacahn and long-term for the snowbirds in the winter. And so one of the things I have to put down on the tax return every year, since we still own it, it was this third or fourth home, do you live in it? And we never do. But we do have another home in St. George that we live in, which is classified as a second home. You're allowed to have two homes to deduct the interest on, personally. You can have a first and second home for right now. Okay, any questions about what it means? Now, if you have a duplex, that exempts it. You can live in one half and live in the other half. We had a confusion last night with a lady that was all excited about, well, I'm deducting the whole thing. And I says, no, it's probably more appropriate for you to do that. If you want to, you can itemize, try to itemize one half, and the other half goes to your rental expense. But that's the way it should be. Question?
A couple of years ago, it seemed like meals were only deductible for a certain, not the full amount. Is that true anymore?
Yeah, it's still 50 cents on the dollar for the
Okay.
most part. Auto and travel. Is there meals up here? No. Generally, for local people like us, we're not going to be able to deduct meals because you're not that far away. However, when we went to Detroit to go visit our new property in Pontiac, auto and travel expense would include the meals. Okay, this auto for you around here is going to be your mileage back and forth across the valley. Mileage back and return from start to finish. Where do you start keeping track of your miles? From the minute you leave the door. It's door to door when you're acting as a property manager or owner. And travel, that would include our hotel airfare to Pontiac. Around here, you're not going to have that as much. Cleaning and maintenance, that means going in and painting it after the tenant moves out. Cleaning is when you deep clean it, clean the toilets, get it ready for the next tenant. Commission, sometimes you have to pay commission to other agents if an agent found you a renter. I'll do that for them. Depreciation will cover later, but right now rental properties are depreciated out over 27 and a half years, and the repairs are anywhere from 5 to 15 years, depending on what they are. Don't forget your hazard insurance. Interest other, what's that? Bank. Very good. Many of you have accounts for your rental properties, and maybe 1 or 2 or 3 rental property accounts, and they charge you $8 a month or 12. You can take that. Okay, legal professional. What's professional?
You.
That's me. Yeah. When you pay a bookkeeper or accountant, that's where we go. Now this is if this is on your personal return. Now if you had an LLC or S corp, you put that as another expense, but you can still put it here. Local transportation expense, that's for your bigger areas like bus service, you know, in the bigger cities. Management fees, we're going to talk about that. Gentlemen, yes, go ahead.
Back on the cleaning and maintenance, if you go in and you're personally shampooing the carpets and cleaning up the final, is there a way to account for that and whatever?
No, it's called goodwill to you. It's called saving a buck. The answer is you can't deduct it, nor is it really income to you. It's just you own it.
But
It's
you
like
can buy the cleaning expense supplies and stuff like that then, I guess.
Yeah, you could write that off, but not for your labor. Yeah, the expenses of it, yeah. Paint, disinfectant, go ahead.
Say something about recapturing depreciation when you sell a rental property.
Right. What about it? Yeah, it's added back. It's added back because you've already taken it as an expense. Now it's going to become added back to, it's going to add it back to your new corrected basis because you've already taken the expense. The government's not going to let you keep it because you've already taken it in years past. It's going to come back as add to your
What if you
gain.
sell it on an installment basis?
Then you take the percentage after that of your profit after that. You break out the interest, principal for the remaining parts of the.
Each year it would be
Yeah,
a
but
different
sometimes
figure.
it's 50% down, then you have to show 50% of the interest then and the gain at that point. Installment plans are good. Those are good. Did I answer your question? You have to carry that same percentage. That's why you want to be careful with that. Make sure you add back the depreciation. Figuring basis and a property after you sell it can be funny because you'll forget about all the repairs you put into it that you have to add all that back in. Then your sale, it's about 10% commission and all that for closing costs. I figure about 10% of the sale, and things like that you got to add back.
So is the depreciation that you recapture done so each year?
No,
Different figures?
yeah, well, no, it's lumped back. You're gonna come up with a net income or loss of the property. And that's gonna be spread out depending on how many periods or how many years you do it over. That way you're gonna show a little bit of a gain every year, not the 50,000 you're showing one year if you sold it all in 1 year, for the sake of argument. Yeah, you slow it down. We can get to questions later. We want to keep going. We can talk to me afterwards. Repairs and improvements, this is where your depreciation comes in. A lot of people like to load that up. It keeps their basis high when they do sell. They don't show as much gain. So if they want to show that down, I'll do it over a 15-year period. Like if you put new soffit and siding on, or put a helical piers, you know what those are? Down in some places, the ground starts to shift and they have to buoy up the building, and they're very expensive. They're like 50, 60,000. So I'll do it over 15 years, so it's real slow. So that adds basis back to his building, because when he's planning on selling it this year, it'll cut down on some of his gain, because he's had it for 15, 20 years, so it's pretty much depreciated now. So anything to help build up his basis. Smart thing I think to do is to get it appraised before you sell it. That way, hopefully it's gonna sell more than what you have still on the books. Improvements, you must always capitalize. Improvements are not repairs. Do you know the difference between repair and improvement? If you don't, you need to talk to somebody like me, or don't ask your neighbor, when I hear this, I heard from somebody you could deduct this, or I heard, I discount it right then and there. Because you've got to go by, I have at the end of this a list of all the expenses that are generally accepted, that more than you'll ever need to know. Betterments include expenses for fixing up a pre-existing defect, mold, etc., and etc. Restoration, if you go in and fix up an old house, totally gut it and start over. They're all capitalized expenses. Adaptation, I adapted an old home in Brigham City to a duplex. I got to take that off. That's what that means. You cut off one of the staircases and made that now the entrance to the new apartment in the back. Repairs, these expenses, you capitalize for improving your property can generally be depreciated as if the improvements were separate property. Yeah, each year, I go down through people's books and I'll say 2013 improvements, 2013 improvements, or leasehold improvements. Every year I go down and just lump it all together and figure out, okay, they're not going to sell for a while, or if they need, you can take it as fast as you want. I usually do 10 years on major repairs. But on carpeting, not more than 5 or 7, because carpeting you're going to replace, because it gets worn out. Here's repairs and improvements. You have that in your packet. Furnace, ductwork, central humidifier. I don't think you put that in a rental, but the IRS allows it. Central vac, if you want to be real nice, you can do that too. But it'd be additions to your building, driveways, fences, How many of you have broken sewer lines and water mains? Those are all capitalized. Those get real expensive, especially when the homes are 50 years or older. Okay, keeping receipts organized. Business owners all know that we have to take this seriously. You've got to keep your receipts. Don't let anybody tell you you don't need to. Okay? Keep them all. You know, I have it, it's true that you can argue, but the Cohen rule says you don't need anything for under 75 bucks. But when they're auditing you, sincerely, at your home, they want to see a receipt, or it's included as income. Make notes on receipts, don't be, yeah, go ahead.
How many years do you have to keep it?
I keep it as long as you can, because they can go back at least 10, 12 years I've seen. It's 6 years generally, but I've seen them go back when they're really onto somebody that hasn't filed for many years and they had a lot of businesses. I have one now that he hadn't filed for 10 years and his bookkeeper embezzled thousands of dollars. Now we're dealing with payroll problems, Social Security problems, I don't know, all kinds of problems. And we don't even know where to begin, neither does the auditor. I think they're just gonna sponge it all and say, you're done. Go ahead.
Is credit card bill an adequate receipt?
Yes and no. We're gonna talk about that. Scan receipts and keep them at least 6 years minimum. If that's too much, just put them in an organized place of paper. I usually get a piece of paper, old piece of paper, a lot of you throw it away. I just get a piece of paper, put them on here, we tell them what it is, tape them on here, and just keep them. That way, that's the way I do it when I get shoebox clients. Shoebox clients bring in boxes of just receipts and hope I can figure out what it's for. But they get billed for it. Because I have to go back and figure out what they are. This is not so much on rental or real estate, but it's in general business. Be organized. Take pictures with your smartphone. These are all ideas from the IRS. Keep a daily business journal. That comes in handy. The reason why I say that, I was in an audit where you probably think that's all I do is audits. I end up getting audits where people don't want to pay $10,000, $20,000 retainers to a CPA firm. You see where I'm going? It gets very expensive if you don't keep a good set of books. I'll do it, and I'll just say, we'll just see how you make out. You know, and I'll try to help them. I bill them for my time, but it's usually at $30 an hour, which is a lot cheaper than most of your professional accounting firms. But if it's really bad, I'm going to say you need to get an attorney. You know, if it's fraud, that they committed fraud, you know. They want me to go pull up their Outlook on Google. They were that emphatic that they find out to verify these expenses, see what these people did on a day-to-day basis. They were in sales. Don't rely on credit card statements. The reason why is unless it says what it is. Lowe's and Home Depot are very good about detailing what it is. It'll say hardware or whatever. But when you go into Staples, you could be going in there and buying something for your wife, but if it says paper, if you put down a receipt, it says paper, pens, or whatever, because office supplies are going to be minimal in your business. In my business, it's very expensive. Mine is very expensive. I got through 13 cases of paper this year. I ate you file half of them, but that's because I give you a physical copy. Some firms will give you a little diskette or a little thumb drive. What are you going to do with that? They still lose the paper copies. You know you're going to lose the thumb drive or the plastic CD. And that's required. Why should you stay away from cash?
Paper trail.
What's that?
Paper trail.
Right. But if you do cash, get them to give you a handwritten receipt saying what it was for. And put on there it was paid by cash for $500 or $50 or whatever. Do not lose out on your, because if I see on a credit card statement or a cash account that says cash withdrawal, ATM, such and such a branch, that's, to me, that's personal income. Unless I have some kind of a, you can't validate it. Unless you just can't. Then it becomes personal. Okay, auto-proof return, self-employed, this is a true example. So you see, your chances of being audited are greater than if you were a wage earner. Why? Why is that true? Why would you be more prone to be audited if you didn't have a wage? Because the IRS suspects you attempt to either hide income or write off personal expenses. That's why I hate Schedule Cs on 1040s. Because all that is continuation of your personal return. And I says, I have no way of proving this. You don't have a separate bank account. I says, as far as I'm concerned, everything that went into your account this year is personal income. And you need to write it on this return.
Did I hear you say you don't like the Schedule C?
On a personal return, absolutely not. Because that means everything's run through.
I think this is the first time my accountant did do it that way.
Why would he do a Schedule
I
C?
don't know, but that's strange that you don't like it.
No, because unless you have a separate bank account for your business. Are you thinking of Schedule E for your rental property? You have a small business?
I think it's Schedule C.
See, you have a business?
Yes.
You may or may not, I don't like them. IRS loves them. You know why they love them, don't you? This is what they say. They look at them 50% more, and they look at self-prepared returns. Every one of them that's self-prepared, they look at them.
Previously, I think we filed on an LLC for my rental property. This year, she said, I'll put it all on Schedule C, include your rental property on the Schedule C.
E. Schedule E.
A lot of them do it on Schedule E.
E. Schedule E is on your personal return. 8825 is on your S Corp or your corporations. Okay, use a professional software. Do not handwrite crap out. Do it on Excel, have your accountant do it, do something. Make it look professional. You can, reason why is your credibility is diminished. Doesn't it look much better to have something handwritten? Can you imagine if I hand wrote this out, how unimpressionable that would look? That's what you're doing. It's a show. It shows me that you know what you're doing. You have to tell the auditor, IRS too. We're talking about audit. Record keeping is a self-image of you. When you walk into some people's homes, how do they look? Some of them are immaculate, some are less. I refer to that as the books. The books tell me how the business is running. What is the quickest way for a business to fail? What is one of the main reasons businesses fail?
Or bookkeeping.
Or bookkeeping, or communication with one another, or none. Communications and recording of data, because you have to know where you're at all times. Can you imagine what the financial reporting is much like a GPS. What good is it goes out halfway to your destination? Okay? You got to keep on track, because once you start a business, you run it, or the business is going to run you into the ground. That's why a lot of people get out of rentals, because the tenants run them. You have to run the business. Document sources of income. If you're audited, the first thing I will do is add up all your deposits. Remember I was telling you, they go through, and don't think they won't go through your personal returns. They will find out credit cards, savings accounts. I've had them literally go through it, and we've gone through all kinds of accounts. It's hilarious to me, totally embarrassing to the client. And I think, what are you looking for, gold? These people don't have any money. He had 10 kids, he was unemployed, he was pulling money off of credit cards to live. That's what they ended up finding. But after 6-8 weeks of this, okay, let a professional prepare your income tax return. Self-return, this is right from the IRS. The IRS tells us every seminar as I go, self-return are more likely to be audited. Okay, a lot of you think you know it all. That's good, I'm glad. But you don't know all the tax savings loopholes. A lot of you guys can put stuff on, and a lot of times we overstate our incomes erroneously, is the biggest mistake I see. A lot of it's not understanding where things go and why, and they take too much or not enough of a deduction. It's better to take less of a deduction than too much. Make sure if you have more than 1 or 2 properties, you incorporate into an LLC. Some of you have businesses, and it's okay to put them in an S Corp, but you want to maximize your protection through an LLC. And I put down there, fees charged by the state of Utah to get everything incorporated, ready for a bank account, legally is $75. Do not spend $300 to $500 to incorporate. I don't charge people to do it because I think it's a thrill for them to get in compliance. Compliance is my big thing. Compliance will get you in. If you're in compliance, you'll be safe. Conclusion. You're only allowed to deduct ordinary and necessary business expenses. That's one thing you always should say, is this a necessary or ordinary business expense for my rental property or business? There's my information. Whoops. I thought I had forms on there of,
I don't think we got that on the PowerPoint.
did they get back?
Right.
That's okay. I had sheets with all the deductions you can take. Those that have it are on the last pages. And you'll need, I think everybody has one. But anyways, I think we need to conclude, but I'll be here afterwards because he has a great presentation too tonight.
Sounds good.
Yeah, those are your deductions that you can take without being in trouble.
Introduce yourself. We have a sponsor tonight, actually, those of you who got a donut and a soda. Thanks to Dee Dee here from Cheng City. So we're going to give her just a minute to introduce herself. So thank you.
We wanted to just give you some sugar, and one of the main things that we want you guys to know is if you have a tenant that is coming up short, that you can send them our way, and we're willing to see to take the risk, so you guys get the rent on the road. So that's kind of the biggest thing that people don't realize, that you can use us as Czech City and say, I've got a friend, at Czech City, if they're having problems either paying you or coming up with a down, and seeing if we can help them get that money so you guys aren't the ones that are without your rent. So we'll all have cards, and Lance is another manager, and we'll have cards at the end if you guys want to come up and talk to us or ask us any questions, and give us we'll just give you our card, and if it comes up, hopefully your tenants are better than mine. So I also have a rental property, and that's how I got involved, is by coming to these, and then I thought, oh my heck, I've had to send my tenants to say, can you go get a loan, get a loan, because I need to get paid. I still have to pay a mortgage, just like you guys. So anyway, we'll be at the back if you want to get our card, and we can help you out.
Thanks again for the donuts. All right, next presentation is going to be Perry, who's talking about how to deal with problem tenants. And it's right here. Right is forward, left is back, and then untap. It's right here.
Thanks, Taylor.
On the microphone.
I don't think so. Can you hear me back there? Can you hear me in the back?
Yes.
Okay. Just in case any of you are interested, I put a brochure on the back table. You're welcome to take one. I am from Real Property Management Advantage, which is a locally owned franchise of Real Property Management. Real Property Management is nationwide. We have about 100,000 units under management, 25 years in the business, 240 locations in 45 states, and about $5 billion in assets under management. I'm Perry Bolliard, licensed real estate broker, and am started a property management company in '09 and realized that I needed just some backup. And the franchise gives us that. And we're really pleased to be associated with Real Property Management. Have any of you ever heard of Real Property Management before? Yeah. It's a locally developed company. It started in Layton, Utah 25 years ago, and has really done well.
How do you charge?
We charge a percentage of collected rents, and usually that's 8%. And I can talk more about that individually if anybody is interested. But I appreciate the opportunity to be here and talk to you a little bit about some areas that I think are important to understand. But I just thought I might change this up a little bit from the presentation that I've been giving. I'm not sure how Paul will feel about this later, but I just thought I would ask you, knowing the subject, which is dealing with bad tenants, handling complaints from bad tenants, knowing that, is there anything in particular that you would like to go away from this meeting tonight with? Do any of you have any things that you'd like to find out about? You all have great tenants, right? Never have any problems?
I want to know if it's legal to shoot them.
I can't help you there. You better get an attorney. I do have a good attorney though. Yes?
Yeah, they signed a contract, but they're problematic. Can you expedite their leaving? Or how can you expedite their leaving?
Okay. So, how to get rid of the tenant?
Yep.
Okay. Okay. Anybody else have any other ideas?
Smoking?
Smoking. Tenants smoking in the property.
How to deal with tenants on housing assistance.
On housing?
Yeah.
Housing assistance.
Okay.
Yeah, when they're getting government help.
Section 8.
I'll just put housing. Okay, any other ideas?
I have a tenant that's in a high-end house. It's hard to rent high-end houses that are furnished. But in the contract, we require them to maintain the yard. High-end professional people don't want to do yard work. But I don't want to up the asking cost to rent it to include that yard work. I don't know what to do, because if it goes too high, I'm not gonna get, it rented. But I do put in these rules, but these people that are fair-minded with money, I find that they will not worry about the snow shoveling and the grass watering.
Okay, we'll talk about that. Any other ideas?
How about if they're gonna claim bankruptcy, or are they claiming bankruptcy?
Okay. These are T in that?
Yes.
I'm not a speller. Yes.
Of late, this has come up a couple of times. People that their credit score shows pretty good, but they've got a ton of student loans, like
Oh.
300,000, or, and I'm just a little nervous about what that means. I mean, in the future, if you know the answers to that and how to handle that issue.
Shall I just call that large debt, or should you want to be specific on that?
Well, and it's been the student debt that's come up, and
Okay.
it's come up twice, and they say, well, the government's deferring it, or, and it's like, but for how long? Because the government always takes their money. They can never get away from paying that debt.
Yeah, they can't write it off.
Okay, if we cover those ideas tonight, will that be okay? I'm going to get into my presentation a little bit in a few minutes, but let's go through these items. The first one, how to get rid of a bad tenant. It's going to depend on how your lease is drawn. And please understand, I'm not an attorney, I'm a property manager, but I deal with these issues every day, multiple times, many days. But it depends on what the lease says. But if you've got a good lease, well drafted, you need to identify all of the problems that make this individual a bad tenant. Now, one thing I'm going to say, I'll say up front, and it will kind of cover a lot of those, and that is, how expensive is it for you if you have an empty unit? It can be devastating, can't it? First of all, you've got to do a make ready, that costs you money. You've got to take the time to find a new tenant, that takes time. Overall, generally speaking, if you can make a good tenant out of a bad tenant, you're better off. Now, I mean that in the fullest sense of the word. I don't think you should carry on with a bad tenant that never becomes a good tenant or never will become a good tenant. But in general, if you can make a good tenant out of a bad one, it's going to save you money in the long run. Now, getting rid of a tenant, you're usually going to be able to find something in your lease that they are in non-compliance. And what I would suggest is that you use every bit of what's in your lease, make the lease the bad guy, and hold their feet to the fire on whatever item that they're out of compliance on. If you've gotten a bad tenant in there for whatever, however you got them there, chances are your lease is going to help you in that circumstance. Eventually, a bad tenant is going to be tired of receiving notices of non-compliance and paying you extra fees for your notification of them or dealing with your attorney. So those are the only things. Now, if they're in compliance and you can't ever get anything, can't ever find anything that they're out of compliance on, then you may be stuck with them. But then maybe you can weather that. I don't know. I don't know that answers your question, but use your lease agreement, and don't be timid about calling your attorney, because an attorney can save you a ton of money in the long run. I was interviewing attorneys today, as a matter of fact. We have a good one, but I want to have some other options, and you know, they know what they're doing, and they can save you a lot of money in the long run. That kind of goes to the second item here, smoking. If you've got a tenant that's actually smoking in the property and your lease said no smoking, I would give them a notice of non-compliance, and it's actually comply or vacate. So if they don't comply in a reasonable period of time, which is usually 3 days, then you can turn that over to an attorney and evict them. The problem with smoking is you got to be there to catch them. I mean, you can go to the home, and if you can smell it in the home, you know they're smoking. I would give them a notice immediately. I carry notices of non-compliance with me, so that if I go visit a property and see that they're out of compliance, I'll give them a notice right then, and that will trigger a $50 fine to them, or an expense to them, which will immediately assess against them. And when they pay their rent, if they refuse to pay that $50, what you do is you post it against the $50 fee. Does anybody charge different than $50 to post up a non-compliance or?
Is that the same as service of notice?
Yeah, it is. A 3-day notice to pay or quit. How much do you charge for that?
75.
75? Okay, so there's a lot of different numbers. We use $50. Seems to be a round number. 75 is okay. That's even better.
25.
25, you might want to consider something new.
Because we never give it. So.
Oh, well, you got great tenants, huh? That's
In the
okay.
past, Paul has told us that whatever our time, if it's suggested 25, the judges would uphold it.
Yeah,
Greater.
you're right. If it's too much. Now, $50 is still okay because you can argue that it took you some time to get out there and some time on the property and then some time to return back to your home or your office or wherever you do business out of. $50 is a good number for us. And I would charge them. I would let them know, you know, it should be in your lease, whatever you charge. And then be sure and bill that. Post their payment first to that, then to rent, which means that they'll be $25 or $50 short on the rent. And you can give them a 3-day notice to pay or quit against their $50.
And they get a late fee for their rent not being fully paid.
Yeah, you always pay the costs first and then rent when you're posting their rent, okay? Does that kind of answer questions on that? Okay, let's move along to housing. The question was, I'm sorry.
Well, they call and say, do you work with housing?
Oh,
So far, I haven't had to work with them, but I understand that can't be, a source of income is not an issue that we can deal with in Salt Lake County at least.
you're right, you're right. But you're not required to take housing. It depends on your policy on how you screen a tenant or tenants. If you have 3 applicants at one time, if you look at them and decide which one's the most,
Qualified.
yeah, well, no, I'm not gonna say desirable. The most qualified. If they're the most qualified, you can take the one that is the most qualified. Now, you're on risky ground when you start doing it that way. As a property management company, we take first in, we look at their applications, and if they qualify, we let them in. If they don't qualify, then we go to the next one. And that way, we don't get into trouble stacking up and just collecting application fees. But anyway, to get back to your question about, you don't have to if they don't qualify under your normal provisions. Now, you have to, the way we look at it is they only have to qualify for that portion of the income, or excuse me, that portion of their payment that they have to make. You follow that? If they have to make that, then you just qualify them against that much payment of their rent.
Salt Lake County is not very cooperative in helping you recoup anything if you lose
No,
it.
they don't. Now, we do business in Tooele County as well as in Salt Lake County. Tooele is wonderful. We can tell them that their client is not living up to the contract, and they'll actually get involved. But here in Salt Lake County, I don't see it so much. So you're pretty much on your own once you take somebody that's in housing. But it goes back to the contract, back to your lease. You use the lease as the bad guy and hold them to every provision of your lease. And it'll save you lots of time and money.
First question I get from people calling in frequently is, do you take housing? Would you answer yes or would you answer no?
Well, I answer yes.
I think you have to.
Yes.
Yeah, I think you're, you know, if you've got one of those secret shoppers out there that's looking for problems, you could get yourself into trouble.
Yeah.
So what the best answer to that is, yes, we'll take you will take housing vouchers, but you have to qualify in every other way to our criteria. First over here, and then I'll get back to you.
Well, and they also need to put the deposit money down within a
That's
certain
right.
amount of time, and that will,
That's exactly right. And,
Often
you know, that'll hang some of them up.
yeah.
Related to housing, we've got programs like the Road Home will offer assistance for like a 3-month period. But can we, do we have to qualify them on that assistance that they'll be receiving, even though they won't be receiving it through the entire length of the lease?
You have to look at their entire, the prospects. If you don't think they can get there in 3 months, then you can bring it up as an issue and ask them how they are going to meet those requirements. And we've had housing people tell us that. They'll back off and say, hey, that's your deal. You need to qualify. So that's up to you.
As part of the qualifications, you can require them to do a background and credit check, notwithstanding whatever their situation is. Therefore, they'd have to pay the $25 or whatever you charge
Yeah.
for an 18-year-old or something. in the house.
Anybody that's gonna sign, we require everybody that's 18 and over to be.
And oftentimes that will discourage them.
It will.
And also, I always tell them that even if they want to apply, that we can't hold it until they pay a deposit. And then we tell them a good sized deposit, like $300.
Higher than that.
Higher than that.
Well, no, that's just to screen them.
Yeah, oh, okay, I got you.
But
That
then
makes sense.
they also have to pay for the screening too. We charge
Sure.
$25 per name that we have to screen them.
Now, you do have to be careful that you treat everybody the same.
Yeah.
Those secret shoppers could get you. You wanna make sure that you treat everybody the same on deposits you require and so forth.
Yeah.
Now,
This lady was saying that sometimes they're slow bringing in the deposit, then they don't count. They don't count a lot.
you should, that's starting out with a bad tenant and you know it. So your best bet is to require them to pony up all those deposits, all that rent before they move